Today I'm joined by Casper Marnie of SBC Warburg, and he's in our Singapore studio. Good afternoon to you there, Casper. Thanks for joining us. We're going to look quite a complex chart of dollar-yen overlaid with the spread between JGBs and T-bonds. Now, you reckon you saw the collapse coming in dollar-yen, and it really wasn't to do with the intervention. Just explain that one to us.
Okay, that's absolutely right. If we have a look at the spread of the chart, look at the bonds, look at the 10-year JGBs and the 10-year note, and take the spread between the two. There's been a 0.8 correlation between dollar-yen and the spread over the last 6 months, with one very important factor. The spread leads dollar-yen by 6 days. Therefore, if we look at what the spread has done, then we have a very good idea what dollar-yen is then going to do over the next 6 days. And as you can see on that chart, the spread started to come off very aggressively before dollar-yen actually came off. So it gave a very good leading indicator that dollar-yen was going to move lower. When dollar-yen eventually started to come off, there was no intervention whatsoever. Dollar-yen came off very aggressively, 500 points, before then recovering. And as you can see, what's happened now in the spread, the chart you have on the screen at the moment, after the large sell-off, the spread has now rallied, and it rallied about 61.8% of the move down, and that's a key technical figure. So if we now look at what dollar-yen is doing and compare that to what the spread has done, it should give us a very good idea what's going to happen next.
We'll take a look at that chart right now. It's dollar-yen on its own here. Okay, take us through this.
Exactly right. So you can see the similarities there. We've now seen that big sell-off in dollar-yen, and looking at what the spread has done over the last 6 days, it has rallied, as I say, up to 61.8% of the big sell-off. Now in dollar-yen terms, that would mean a rally to around 141.75. So really looking for a move up to those sort of areas in dollar-yen before we then come off and start to consolidate. When we had the intervention, it was only after the fast 500 points of the sell-off we'd had in dollar-yen. I think the intervention only really helped it on its way, and dollar-yen was always going to come lower.
Well, they say central banks like to push at open doors, so I guess that would figure in a way. But you're targeting now 141.75 as the next level to look for, really.
That's right. That'd be the next sell level for dollar-yen. Looking for a little recovery now on the back of a stronger dollar-yen and a stronger dollar mark, which I also think we're going to see high levels over the next few days.
Let's take a look at dollar mark now, 179.30 right now. What are you seeing in the chart there?
Okay, we've had an inverted head and shoulders form in dollar mark, and most of the textbooks will tell you that when inverted head and shoulders breaks, you can see the neckline there at 179.04. It's the three bottoms formed in the very bottom right-hand side of the picture. The larger bottom is the head, and the two straddling it either side of the shoulders. When the market breaks up above those shoulders, you expect it to go the height of that pattern projected from the break. We've only seen a high of 81.70 or so far, and that really hasn't achieved the target yet. Textbooks will tell you that we come back and retest the neckline around 179. Unfortunately, in real life, so many people now look at charts. Everyone puts their stops below these necklines, so it's natural to have a move back down below 179. I think this should now hold it, and we should now head higher, again, as I say, with dollar-yen moving higher, and achieve that objective. That objective is some 350 points, which should put dollar mark up at 182.5.
Okay, well, nice to hear a technical analyst talking about real life, Casper. Let's get a look at cable, finally.
Sure.
We're looking at 167.46. What are you seeing there now?
Okay, looking at some Japanese candlestick charts in cable, perhaps it would have been nice to look at those in dollar-yen as well. The candlestick charts tell me that cable is looking very toppy up here. In the last 2 days in the preceding two sessions, yesterday we formed a hanging man. On the candlestick chart there, it's a little difficult to see, but those last events are a hanging man and a doji. Doji means the same in Japanese, where the market opens and closes at the same level. And that's often the sign of a market beginning to exhaust itself. And obviously that fits very well with a stronger dollar over the next few days. So I see sterling coming down to this key 165.5 support area. You can see that spike high of a few weeks ago was 165.5, and also back in May that was again the low. So looks like a very pivotal level for cable. So looking at cable coming down initially and then heading higher from there.
Okay, Casper Marnie, SBC Warburg, thanks very much for joining us from Singapore today. Interesting stuff. Well, time now to catch up on all the soccer